Real estate is one of the most effective ways to generate passive income and build long-term wealth. Whether you're a complete novice or someone exploring ways to diversify your portfolio, understanding the foundational strategies can help you leverage real estate opportunities and achieve financial freedom. Why real estate for passive income? Real estate stands out among passive income streams because it offers tangible assets, steady cash flow, and the potential for property appreciation over time. While there's an upfront investment of time and money, many strategies allow for minimal ongoing effort once established. According to The Motley Fool, the U.S. real estate market has grown steadily over the past decade, with rental properties consistently delivering positive returns in both urban and suburban areas. 6 proven strategies to earn passive income in real estate investing in rental properties. How it works. Purchase a property and rent it out to tenants. The monthly rent payments become your income stream. Why it's effective. Properties in high-demand areas like Dallas, Charlotte, or Phoenix offer higher rental yields. Pair this with long-term leases for stability. Pro tip. Use property management companies to handle tenant relations and maintenance, ensuring a hands-off approach. Real estate investment trusts, REITs. How it works. REITs allow you to invest in real estate without owning physical property. These trusts pool money to buy and manage income-generating assets. Why it's effective. REITs provide exposure to real estate markets and often yield dividends, making them an ideal option for beginners. Pro tip. Opt for diversified REITs that include commercial, residential, and industrial properties for reduced risk. House hacking. How it works. Buy a multifamily home, live in one unit, and rent out the others. Your tenant's rent can cover the mortgage. Why it's effective. This is an excellent strategy for first-time investors who want to reduce housing costs while building equity. Pro tip. Research government-backed loans, like FHA loans, that require a low down payment. Short-term rentals, Airbnb. How it works. Turn a property into a vacation rental and list it on platforms like Airbnb or Vrbo. Why it's effective. Short-term rentals can command higher rates than traditional leases, especially in tourist-heavy locations. Pro tip. Focus on properties near attractions or business hubs for consistent bookings. Real estate crowdfunding. How it works. Platforms like Fundrise and CrowdStreet allow investors to pool money for large-scale real estate projects, from apartment complexes to commercial buildings. Why it's effective. This approach requires lower capital than direct ownership and provides passive income through dividends. Pro tip. Review the track record of the crowdfunding platform in specific projects to mitigate risk. Build to rent, BTR, properties. How it works. Develop properties explicitly designed for long-term rental income. Why it's effective. With the growing demand for rental housing, this strategy offers significant ROI for experienced investors. Pro tip. Partner with contractors and developers to scale this strategy efficiently. Motivation. Why start today? The real estate market is evolving rapidly, and waiting to invest could mean missed opportunities. Consider these trends. Remote work impact. Many professionals are leaving high-cost cities for affordable suburbs, increasing demand for rental properties in those areas. Low barrier options. Tools like REITs and crowdfunding make real estate more accessible than ever, even with limited starting capital. Wealth building potential. Owning property not only generates income but also offers tax advantages and appreciation that stocks can't match. Beginner tips to get started. Educate yourself. Read books like The Millionaire Real Estate Investor by Gary Keller or follow experts like Brandon Turner, Bigger Pockets, for actionable advice. Start small. Consider house hacking or REITs to minimize upfront risk while learning the market. Leverage loans smartly. Use good debt, such as a mortgage, to finance your investments without tying up all your cash. Focus on location. As the adage goes, location, location, location. Choose areas with strong job markets, population growth, and rental demand. Final thoughts. Real estate offers one of the most reliable paths to passive income and financial independence, but success requires planning, research, and a willingness to take calculated risks. By starting small and building a diversified portfolio, you can steadily grow your wealth and enjoy the freedom that comes with a passive income stream.